Folks, if you paid attention to my daily financial news over the last year or so, I have used a phrase, the marginal buyer or buyers at the margin. I don't think I've done a great job of talking what it is, and why it is something we should all pay attention to. So we're going to dig into this with the one and only Matt, the mortgage guy. How you doing, buddy?
I'm doing good, Mike. How you doing?
I'm doing well. So when I talk marginal buyer, you are right in the catbird nest to kind of see it happen on a daily, weekly, monthly basis. So why don't you talk about what you're seeing and really highlight what a marginal buyer is, and then we'll talk about why we all need to be paying attention.
Right. And for me, the simple way to think about it is, of course, there's have to buyers. Relocated for job, divorce, unfortunately, people are splitting up there's have to buyers. And then there's buyers that, hey, I just got into my new career. We're thinking about having a kid in a year, been renting. I'm 33 years old. I want to buy. They are not forced to buy, but they're thinking about it. They get themselves pre-approved and it either works or it doesn't. And they're kind of on the fence, really. And what I see in my personal business, what me and you, talk about a little bit offline is, you go from 6.5 to 6.75 to 7 to 7.25. And that pool of buyers that are like, I might do it, I might buy in 2023 shrinks. And right. At 7.25 or 7.26, wherever we're at currently, like 80% of those buyers are just saying, pause.
Yeah.
I'm going to hold off for now.
Yeah, so I think there's a couple of things I want to highlight for this and kind of bring some education. When you have an econ degree, you actually learn something pretty early on that probably surprises people. Demand, in this case a buyer, is actually a two-step function. So the best example might be a Ferrari or something really extravagant, right? A lot of people want a Ferrari. That is step one. Step two of a demand cycle is you can actually buy it or afford it or get approved or whatever the vocabulary you want to use is. And that's where in many cases it all falls apart because lots of people want stuff, but less people typically want to do it. So when we're talking about the marginal buyer in housing today, I actually think the mortgage market, frankly, where you play every day, has taught buyers something by accident. What do I mean by that? If you go back and look at the interest rate chart, we saw three noticeable spikes. Last July or August, it broke through 6 and hit 7, came back down to 5.99. Then that went up. It broke or almost got to 7 or went over 7, came back down. And now we're in our third spike. And unfortunately, we're hitting higher highs, which if you have trends, that means we're going up from here. But what I think the marginal buyer is rather simple. And they're basically saying, and I think 7% bad, 6% good. And now the month of August, which we're now August 16th as of this recording, I think we're above 7 all month, which hasn't happened, right? It's been a couple of spikes, right? So I think the marginal buyer sees 7 and goes, I'm out. Hit pause, to use your word.
Right. Yeah.
Right?
And to your point, some of it is unwilling and some of it is unable, right?
Because exactly. Because some people can't get approved. Yeah. Exactly.
Yeah. Math qualification at the end of the day is a numbers game. If, you go out there and you get pre-approved and rates are 5.99 and you can buy, up to 500,000 and over time rates increase to 7.25. That lowers what you can buy. And if that number goes from 500 to 420 and the neighborhood you want to live in doesn't have anything under 450, then you're, essentially put on pause. It doesn't even have to be a voluntary thing. So that's happening to quite a few buyers. And so I think in this whole, supply versus demand scale, me and you talked about this too. I think we see in Q4 of 2023, a very similar market to what we saw in 22 in a lot of markets where, we don't have a lot for sale. There's not a lot of supply, but demand has a bigger drag on it. And, it's good news, honestly, for buyers who are in the market, because then, we get to be creative. We get to use seller credits. We get to do some fun stuff, which we'll talk about in another video, the best things you can do as a buyer if you're, set on buying in what looks to be a more buyer-friendly market upcoming.
Yeah, we're repeating Q4, but back to this buyer demand, the marginal buyer. I can see it retreating from the market today. But here's the deal about demand. It stacks up like a pipe or pressure or something. And as I said kind of in my rant, 7 is pause, 6 is good. So I feel fairly confident that someday in the future, mortgage rates will be 6 again or in the 6s. And let me just tell you this, the longer it's in the 7, the more pressure that builds up. If we're in the 7s the rest of the year, the pressure will be astronomical next year when we hit the 6s. And it will unleash a torrent of marginal demand, and we will once again be in an unhealthy market where people are overpaying and doing stupid things.
Yeah, I mean, I agree 1,000%, and I have the proof. I literally have a folder that says pre-approved buyers. Somebody used an analogy. I don't know if you've heard this, Mike, but I love analogies. You know, you live in Minnesota and there's a snowstorm. Mm-hmm. Apple, you know, the computer store and McDonald's are different businesses. If it's snowing and you can't leave your house, you're going to find something different for dinner. So McDonald's won't get your business. If you really need a new computer from Apple for your kid starting school in 3 weeks, you're still going to buy it. You're just not going to buy it that night. And so that's what's happening with mortgage demand. I've got pre-approved buyers that are well qualified. I don't find a property that I like. You know, I might, you know, really feel better about rates 1% lower, whatever the case may be, whatever the reason for the pause. When it gets unpaused, there's the buyers that would be there in Q1 or Q2 or whenever that is, along with everybody who's sat on the sideline. So I agree with that 1,000%. And that's why, you know, to your point, the longer we continue to stack up demand that sits on the sideline, the kind of worse off we're going to be for the buyers that are trying to buy once it loosens up a little bit.
Yeah, so let's try to close on a positive note. So again, if this was the situation I was in and I was one of those marginal buyers, it just feels better to step away. As hard as it is, I would do the work. I would write disrespectful offers. And again, I would try to find that motivated seller in my buy box and simply get a better price, right? We talked about a gentleman named Ben on my daily financial news a couple of days in a row because he did the right things, right? It took work. It took follow-up. It took him losing out and then following up and getting it again. He got a 20% haircut on a fourplex. And again, run your numbers at 7.25 or whatever they are, or 8 if you're an investor. And then if rates go down in the future, you do a refi and bingo bango, cash flow goes up. But I'm just fearful that the marginal, it's just easier to say 7 is bad and pull back instead of saying, wow, 7 is good. All my competition is left. I'm going to get a $50,000 discount. That's how people should be thinking.
You know, about being a buyer and having a little bit of control back is you get to set the rules. If you write an offer and say, I want a $50,000 discount, and they say no, cool. You don't buy, right? And so it's the deals are out there. And I mean, I felt this 4 to 6 weeks ago. And I'm seeing it. I sent a message to a couple agents this morning and I just said, notice this property is still in the market. Any offers? In a neighborhood where stuff did not stay on the market for more than 7 days ever, 15, 20 days on the market. Things are different. And so Q3 and Q4, there's going to be opportunities. So that's the good news. That's the high note. If you're looking to buy, you're going to have some leverage in a lot of markets. Even at the entry level. And this is something that me and you talked about before, where it's like, of course you got leverage because there's not so many buyers at $1 million, but at 500 grand where it got listed and you had multiple offers and people are like, what the heck is going on? Those properties are starting to get 15, 20, 30 days when they never would last more than a week. That is good news for buyers. And that's the kind of market you want to operate in. You don't want to operate in the future market where all the marginal buyers come back and it's competitive. You know, even if you have to do it with a higher interest rate, I'm looking forward to our conversation too about how you set yourself up, knowing what's coming with interest rates with a buy down. So we'll jump on that in the next video.
Yeah, folks, sorry if you heard my dogs bark. I am in my studio, but we also have people coming by ringing the doorbell because we have some work being done. So they're a little barky. I apologize for that, but we'll just keep rolling because that's what happens when you do a live show. Matt, where can people find you if they want to get started, get a file going?
Go to greatmortgagebroker.com. We're closing loans all over the country. So no matter where you're at, we can help. Greatmortgagebroker.com.
Awesome, buddy. Thanks again.